There's a quiet question that almost nobody asks out loud, but the people who build real wealth think about it constantly. Not how much money is in their bank account today, not how high the market might go tomorrow, but something much deeper. They ask themselves, when the world shifts, when currencies change, when the rules of money evolve, will I already be positioned or will I be too late? Because history reveals something very telling. The biggest financial opportunities are almost never obvious when they're happening. They look boring, they look slow, they look unimportant, right until the moment they suddenly aren't. And that brings us to a simple but powerful question. How many ounces of silver should you really be holding before it's too late? Before we talk about numbers, charts, or ounces, we need to address something far more important. The mindset of those who quietly position themselves ahead of the crowd. There's a story often shared among long-term investors. Years ago, a small group of disciplined individuals began accumulating assets that most people ignored. They weren't chasing hype. They weren't making emotional decisions. They simply understood one timeless principle. Real wealth is built by preparing before the crowd arrives. While others were spending everything they earned, these individuals were quietly converting a portion of their income into real, tangible stores of value, month after month, year after year. At first, it didn't look dramatic. A few ounces here, a few ounces there. But over time, something powerful happened. What looked small at the beginning became significant. What looked slow became strategic. And that's the first lesson many people miss. Wealth rarely appears all at once. It grows quietly while others are distracted. Think of silver like planting seeds. No one plants a tree expecting shade the next day. But the person who plants consistently, who waters patiently, eventually owns the forest. Silver accumulation works the same way. The question is not how fast can I get rich? The real question is how disciplined can I become? Because discipline turns small actions into powerful outcomes. Consider some of the most successful wealth builders in the world. Many entrepreneurs and long-term investors follow a simple rule. Convert a portion of what you earn into assets that preserve value. Not all of it, but enough that over time your financial foundation grows stronger and stronger. Some people choose businesses, some choose real estate, some choose precious metals, but the underlying principle is always the same. Don't just work for money. Make your money work for your future. Imagine two people starting their journey today. The first person spends nearly everything they earn, maybe saves a little when they remember, and their financial future depends almost entirely on their next paycheck. The second person follows a different path. Every month, without emotion and without hesitation, they convert a portion of their income into assets. Sometimes it's 5 ounces, sometimes it's 10, sometimes it's just 1, but they never stop. 5 years later, their situation looks completely different. Not because they made one lucky move, but because they made hundreds of small, intelligent decisions. That's how wealth actually grows. Consistency beats intensity. Another powerful lesson comes from entrepreneurs who built success from almost nothing. Many of them share the same insight. The earlier you start accumulating assets, the easier the journey becomes. Why? Because time multiplies discipline. If someone begins stacking small amounts of silver early, those ounces start adding up faster than most people expect. 10 ounces becomes 50, 50 becomes 100, 100 becomes several hundred. And suddenly the person who started small has built a serious position, not through luck, but through patience. Patience is one of the rarest financial skills in the modern world. Most people want instant results. They chase quick profits, trending ideas, and emotional decisions. But the calm investor understands something deeper. The goal is not excitement. The goal is stability. Think about it this way. Imagine building a fortress for your financial life. Every ounce of silver you accumulate is another brick in that fortress. One brick alone doesn't look impressive, but hundreds of bricks. That becomes protection. That becomes strength. That becomes peace of mind. And peace of mind is something money alone cannot buy. This leads to an important shift in thinking. Instead of asking what is the perfect number of ounces, ask a better question. At what percentage of my effort am I consistently converting income into lasting value? Because the real winners in wealth building are not the people who make one perfect decision. They are the people who build systems. Many disciplined investors follow a simple approach. Whenever income comes in, a portion is automatically converted into long-term assets. No debate, no emotion, no procrastination, just consistent action. This simple habit transforms financial lives. Over time, your stack grows, your confidence grows, and your independence grows. Suddenly, the world looks very different. Instead of feeling uncertain about the future, you feel prepared. Instead of reacting to every change, you stay calm. Instead of asking, what if things go wrong, you start asking what opportunities are coming next. That's the psychological power of owning real assets. They change how you think. They change how you plan. They change how you move through life. But there's another element people often overlook. Silver stacking is not just about wealth. It's about discipline. Each ounce represents a choice to think long-term, a choice to delay instant gratification, a choice to build something that lasts. And those choices reshape your entire financial identity. You stop thinking like a consumer and start thinking like an owner. And owners build the future. So how many ounces should someone really aim for? The honest answer is different for everyone. For some, the first milestone might be 50 ounces. For others, it might be 100, 500, or even more. But the exact number matters far less than the habit behind it. Because once the habit is formed, growth becomes inevitable. Every paycheck becomes an opportunity. Every month becomes progress. Every year becomes transformation. Imagine looking back 5 or 10 years from now and realizing your small monthly decisions built a powerful financial safety net. That's not luck. That's strategy. That's vision. Most importantly, that's leadership over your own life. Because financial freedom is not given. It's constructed ounce by ounce, decision by decision, day by day. There's a quiet advantage that most people overlook when it comes to building real wealth, and that advantage is time. The earlier someone begins accumulating valuable assets, the more powerful their financial position becomes over the years. Many people delay taking action because they believe they need large amounts of money to start. They wait for the perfect moment, the perfect income level, or the perfect opportunity. But the truth is that wealth rarely begins with large moves. It begins with small, consistent decisions made early. Imagine 2 individuals beginning their financial journeys. One person waits, believing they will start investing once they earn more. Years pass, while expenses grow and opportunities come and go. The other person takes a different approach. Even with limited income, they begin converting small portions of what they earn into tangible assets, just a few ounces at a time. At first, it may seem insignificant, almost too small to matter. But month after month, year after year, those small decisions begin to compound into something powerful. The beauty of starting early is not just about the quantity you accumulate, but about the habits you build. When someone develops the discipline to consistently set aside a portion of their income for long-term value, they transform their entire relationship with money. Instead of thinking only about spending, they begin thinking about preservation, growth, and stability. Each ounce becomes a symbol of patience and foresight. Many successful investors often share the same insight. The first stage of wealth building is not about maximizing profits, but about establishing a strong foundation. A person who starts early gives themselves the gift of time, and time quietly multiplies their efforts. What starts as a small stack slowly grows into a meaningful reserve. Over the years, the difference between someone who started early and someone who waited becomes dramatic. Silver accumulation reflects a timeless principle of success. Just like planting seeds in fertile soil, the earlier the planting begins, the stronger the harvest can become. A single seed may not look impressive, but a field planted consistently over time becomes a powerful source of growth. In the same way, early accumulation builds momentum, confidence, and financial resilience that many people only wish they had started sooner. One of the most powerful lessons in building wealth is understanding that consistency matters far more than perfection. Many people believe they must wait for the perfect moment to start, the perfect price, the perfect strategy, or the perfect amount of money. Because of this mindset, they delay action again and again. Meanwhile, the individuals who quietly build strong financial foundations are rarely chasing perfection. They're simply consistent. Consistency creates momentum. When someone makes the decision to regularly convert a portion of their income into lasting assets, they remove emotion from the process. They no longer worry about timing every move perfectly. Instead, they focus on building a habit that works regardless of short-term uncertainty. Think of it like training the mind the same way athletes train their bodies. A single workout does not transform someone into a champion. But showing up repeatedly, even on days when motivation is low, slowly builds strength, endurance, and resilience. Financial discipline works the same way. Each time a person chooses to set aside value instead of spending it impulsively, they strengthen their long-term thinking. Many experienced investors understand that trying to predict every market movement is nearly impossible. The real advantage comes from staying steady while others move emotionally. When prices fluctuate or uncertainty appears, the consistent investor continues their plan. They keep stacking, keep building, and keep focusing on the bigger picture rather than short-term noise. Over time, this steady approach removes pressure and replaces it with confidence. Instead of worrying about making one perfect decision, a person knows their system is quietly working in the background. Every few ounces added becomes another step forward. Slowly, the stack grows. Slowly, financial security begins to take shape. Another powerful benefit of consistency is that it transforms discipline into identity. At first, someone may feel like they are forcing themselves to save or accumulate assets. But after repeating the process enough times, it becomes natural. The person no longer debates whether they should convert part of their income into long-term value. It simply becomes part of who they are. This mindset shift is where real transformation happens. Instead of reacting to money emotionally, the consistent investor moves with intentions. They understand that long-term success is rarely built through dramatic actions, but through hundreds of small decisions repeated with patience and focus. One of the most powerful shifts a person can make in their financial life is moving from the mindset of a consumer to the mindset of an owner. Most people are taught from an early age to earn money and then spend it. They work hard, receive their income, and quickly exchange it for things that provide temporary satisfaction: new gadgets, new clothes, new upgrades to daily life. While these things can bring short-term comfort, they rarely contribute to long-term financial strength. An owner thinks differently. Instead of asking, "What can I buy with this money today?" they ask a more powerful question: "How can this money serve me in the future?" This small change in thinking begins to reshape every financial decision. Income stops being just something to spend and starts becoming a tool for building stability and independence. When someone begins converting part of their earnings into lasting assets, they are making a statement about their priorities. They are choosing long-term security over short-term impulse. Silver, like other tangible stores of value, represents this shift clearly. Each ounce becomes a quiet symbol that a person is thinking beyond the present moment. Many successful entrepreneurs talk about this exact transition in their journeys. Early in life, they realized that spending everything they earned would keep them trapped in a cycle of working without building real ownership. The turning point came when they began redirecting a portion of their income into assets that could outlast the paycheck that created them. Over time, these decisions compound. Instead of watching money disappear into endless expenses, the owner watches their base of assets slowly expand. What once felt like sacrifice begins to feel like progress. Each decision reinforces the identity of someone who is building rather than consuming. This mindset also creates a deeper sense of control over one's future. When a person owns assets, they are less dependent on unpredictable circumstances. They are no longer relying solely on their next paycheck or hoping external conditions remain stable. They have created something tangible that stands beside them as a financial foundation. The more someone embraces the mindset of ownership, the more their habits begin to align with long-term growth. Spending becomes more intentional. Saving becomes purposeful. Investing becomes a natural extension of how they see their role in the world, not just as someone who works for money, but as someone who builds lasting value over time. Imagine your financial life as a structure you're building over time. Many people construct that structure using only one pillar: their monthly income. As long as the paycheck continues, the structure stands. But if something unexpected happens, if income slows, expenses rise, or circumstances change, the entire structure begins to feel unstable. That is why some of the most disciplined wealth builders focus on creating a financial fortress rather than relying on a single source of stability. A fortress is not built in a single day. It is constructed brick by brick, layer by layer, with each addition strengthening the walls that protect what matters most. In the world of personal finance, assets serve as those bricks. They are the pieces that add durability and resilience to your financial foundation. Among these assets, silver has long been viewed as a strategic layer that contributes to that sense of protection. Think about the psychological power behind this idea. When someone holds tangible value, something real that exists outside digital numbers or temporary trends, they begin to feel a deeper sense of control over their financial environment. Each ounce represents preparation. Each addition to the stack becomes another reinforcement in the walls of that fortress. The process is rarely dramatic. No one places a single brick and suddenly declares the fortress complete. Instead, the strength comes from steady progress. A few ounces acquired over time may not seem like much at first glance, but with patience and discipline, those small pieces accumulate into something substantial. What once looked like a modest effort gradually becomes a visible structure of financial stability. Many experienced investors describe this approach as building layers of security. One layer might come from income, another from skills and business opportunities, another from assets that can hold value through changing conditions. Silver fits naturally into this philosophy because it represents a form of wealth that people can physically hold, store, and pass forward. When individuals view their financial strategy through the lens of building a fortress, their mindset changes. They stop focusing only on short-term gains or quick wins. Instead, they think about durability, protection, and long-term resilience. Each ounce added becomes a quiet reminder that they are strengthening their position step by step. This approach encourages patience and intentionality. Rather than reacting emotionally to every shift in the financial world, the fortress builder stays calm, continuing to place one more brick whenever the opportunity appears, gradually reinforcing the structure that protects their future and strengthens their financial confidence. One of the most fascinating patterns in the world of wealth building is that the biggest financial shifts often reward the people who moved early, quietly, and without attention. Before any major opportunity becomes obvious to the public, there is usually a small group of individuals who recognize the potential long before the crowd noticed. They were not reacting to excitement or hype. They were simply positioning themselves ahead of time. Positioning is a concept that experienced investors understand deeply. It means preparing before the majority of people realize preparation is necessary. While many wait for clear signals or widespread confirmation, those who think strategically begin taking small steps long before the moment becomes obvious. This does not require perfect prediction. It requires awareness, patience, and the willingness to act while things still appear calm. Throughout financial history, many opportunities follow the same pattern. At the beginning, interest is low and attention is limited. The asset or idea may seem ordinary or even unimportant to most observers, but the disciplined few understand that value is often built during these quiet phases. They begin accumulating slowly and without urgency, allowing time to work in their favor.